This is Ken Boyd with the Accounting Accidentally website. This is a discussion of flow of manufacturing costs. Remember that you can go to the Accounting Accidentally website to find links to almost 400 YouTube videos and also 400 blog posts. This has been a difficult subject to teach, and I found over the years the only way to really do it decently is to put it in the form of a spreadsheet. This is a section of a spreadsheet that I use to explain the flow. So let's start over on the far left here, where you have control accounts. So I want you to imagine a company making baseball gloves, and they're spending money on three different things. They're paying labor costs for people to run machines and sew baseball gloves. They're buying leather, plastic, and other materials. That goes into material control. And then they're allocating overhead for utility costs and other costs, for example. That's going into manufacturing control. The key here is that there might be multiple jobs, multiple production runs going, and all the costs go into the control accounts in the beginning. So let's say that we start a production run of 1,000 baseball gloves. And now we're going to start taking money out of the control accounts and moving it into work in process, or WIP, which is defined as partially completed goods. So you'll see in brown here, 141,250 out of labor control credit, debit work in process. We now allocate overhead based on some sort of allocation rate. We take 160 credit out of allocated overhead, we debit work in process. 38,750, we take leather and plastic material, credit material control, we move it to work in process. The sum total is all the stuff in brown, is all the money that we now have on the factory floor making baseball gloves. When we shut the doors of the factory at night, a certain number of those baseball gloves are partially completed, which is the definition of work in process. Then we finish the baseball gloves and we need to move the cost to finished goods. So in blue here we have 376,600 coming out of finished goods credit. We debit finished goods coming in from work in process in blue debit. So the flow so far is in control accounts, move to work in process, out of work in process, into finished goods. Now the gloves are done, they're packaged up, and somebody buys them. The last step is to move them into cost of sales. So in red, we credit to reduce finished goods account 378,500. We debit cost of sales and expense account 378,500. Now there's one more little twist here, which is we may under or over apply overhead. In other words, the actual cost may differ from the assumptions we made about overhead costs applied. If we're under, that is, we didn't allocate enough, in this case, we actually spent 170 in brown. We applied 160, which means we're 10,000 too low on our costs. We're going to add 10,000 as under applied overhead to our cost of sales. And finally, you'll see a formula here for cost of goods sold. The beginning balance and finished goods, we add the cost of goods manufactured. Those are the two debits in the finished good up here. The subtotal, which is not in the T account, 403,500, goods available for sale. We subtract out the ending balance in finished goods, 25,000, and we get cost of goods sold, 378,500. So this flow is how costs move through production. And at any point in production, you could have money in control accounts, in work in process, finished goods, and cost of sales. Remember that you can join Conference Room. The address is up here, which is a site where we have live chats, blogs, videos, all about accounting. It's a community for accountants. So if you're interested, join us in the conference room. Thanks, and we'll see you next time.